Michael Burry is preparing for something big. His latest investments show that the investor has been making huge purchases, including acquiring Chinese e-commerce stocks. But what have been his most significant investments, and what can we learn from them? Stay till the end to find out all the answers. What stocks has Burry been buying? Michael Burry recently added 7 new stocks to his hedge fund, Scion Asset Management, including Chinese e-commerce companies like Alibaba and JD.com, and technology companies like Black Knight. He is betting heavily on the discretionary and industrial sectors of the economy because they tend to benefit from economic growth. In January 2023, Burry predicted that an economic downturn was coming and was taking steps to protect his capital. So first, Black Knight Incorporated. According to his latest 13F filing, he reportedly bought 150,000 shares of technology company Black Knight, representing 20% of his portfolio. The purchase amounted to an estimated value of $9,263,000. With this recent acquisition, Black Knight Incorporated is now the second largest stake in Scion's portfolio behind Geo Group Incorporated. For those unfamiliar, Black Knight is a US corporation that provides integrated technology, services, data, and analytics for the mortgage lending and real estate industries. In other words, the company partners with banks and mortgage lenders to streamline the mortgage lending process. They also provide software to help manage and process loans and handle customer documents and information, and ensure all regulations are met. If Burry has decided to add it to his portfolio, it could mean that he expects significant changes in these industries. So far, Black Knight's earnings have grown 111.7% over the course of the last year. Recently, Intercontinental Exchange signed a definitive agreement to acquire Black Knight for a valuation of $13.1 billion. However, the market capitalization currently stands at $9.92 billion. In other words, this could represent a potential upside of 32% should the deal go through. Unfortunately, the deal is being held up by regulators who have already expressed concerns about antitrust laws. Moreover, the recent rapid rise in interest rates has caused hardship for Black Knight's commercial clients, leading to a revenue drop. Yet, given that mortgage rates will not go up forever, the situation could be about to reverse. So it may be for these reasons that it is a good time to invest in this company. Next up, we have Coherent. The next company Burry acquired is Coherent, a US company that manufactures optical and semiconductor materials and now occupies about 11.31% of his portfolio. After purchasing 150,000 shares, Coherent has become one of the biggest companies that Burry trusts. Coherent's businesses focus on the production of 3 main types of products: semiconductors, networking equipment, and optical lasers. Recently, however, the company has been down 52% from its peak in early 2021 when the proposed acquisition of Coherent was announced. Nevertheless, Michael Burry seems to have been waiting for the perfect time to get into the company, as Coherent's share price has risen 40% since October 2022. Moreover, the company has delivered significant results, with quarterly revenues reaching a record $1,370 million or $1.37 billion, illustrating 70% year-over-year growth despite persistent supply chain challenges. Despite all this good news, Coherent is coming off a rough patch against its earnings. Rising material and interest costs led to a loss of $0.58 per share compared to a profit of 44 cents per share in the same quarter last year. Despite this, the company managed to retire $133 million of debt during the quarter, reducing interest obligations for future quarters. So this seems to be one of Burry's smartest investments. Alibaba. Next up, we have the Chinese e-commerce giant Alibaba. As you probably know, Alibaba is a wholesale marketplace for buyers looking to purchase large quantities of products at the lowest possible prices. This is why many e-commerce and dropshipping businesses often work with the firm. The company is also the best choice for buying private label products because it allows us to buy directly from manufacturers. This represents a huge advantage for those who want to engage in e-commerce. Now that the Chinese giant is on the road to recovery, Burry has acquired some 50,000 shares, representing 9.47% of Scion's portfolio. While not Burry's biggest purchase of the quarter, it is certainly one of the most intriguing because it shows that Burry is beginning to trust Chinese technology. In fact, in the second quarter of 2019, he had already bought Alibaba shares, so this is not the first time that he's decided to bet on this company. After Alibaba's share price fell 45% in early November 2022, the stock has already shown an impressive recovery of more than 50%. In March 2022, the corporation announced that it would increase its share buyback program from $15 billion to $25 billion as a signal to shareholders that Alibaba is confident in its future growth. This is why Burry has been optimistic about Alibaba's future direction. JD.com. JD.com is another Chinese company specializing in e-commerce, which makes up 9.05% of Michael Burry's portfolio. Scion Asset Management's most recent purchase of JD.com Incorporated amounted to 75,000 shares for an estimated $4,210,000. In doing so, JD has become the second major Chinese e-retailer in which Burry has recently become interested. One of the reasons that could have motivated his purchase is the near 50% share price drop that took place from the March 2022 highs. Surprisingly, Burry was able to predict that the company would recover, so he bought shares of the company at exactly the right time. Since then, the firm has rallied more than 40% from its low point in the quarter in which Burry invested. Wolverine Worldwide. Another of Burry's favorite companies is Wolverine Worldwide, a US footwear manufacturer representing 8.36% of his portfolio after he purchased 365,101 shares. Wolverine Worldwide might not necessarily be an immediately recognizable name to many people. However, some brands associated with the company, like Saucony, Merrell, Sperry, Hush Puppies, and Cat, are much more familiar to the general public. Burry apparently decided to acquire Wolverine Worldwide because of a significant price drop. The company had fallen as much as 60% from its highs 2 months ago, following poorly received third quarter results in early November. Fortunately, the company has recovered about 60% from these November lows, but is still 37% below its returns of last year. Nevertheless, this could present a growth opportunity that Burry has again been able to anticipate. MGM Resorts International. Next up, we have MGM Resorts International, a Paradise City-based business group that owns and operates casinos, hotels, and shows worldwide. Burry recently acquired 100,000 shares for an estimated value of $3,353,000. This means that MGM now represents 7.2% of his portfolio. MGM also has interests in several entertainment and gambling companies, including online gaming and sports betting. Given that people will continue to spend money on travel and entertainment, MGM Resorts International is a solid choice for most portfolios. Therefore, Burry's investment in this firm demonstrates that he will continue to bet on strong spending in the entertainment and tourism industries, no matter how difficult the macroeconomic backdrop is. But let's now move on to two of Burry's smaller purchases before focusing on the largest stock that integrates his portfolio. Qurate Retail Incorporated. First, we have Qurate Retail Incorporated, a conglomerate with several leading retail brands. Burry currently holds 1,500,000 shares of the company, which represents 5.25% of his overall portfolio. He has dropped the number of shares invested since the previous quarter. Next up, SkyWest Airlines. We have SkyWest Airlines, a North American regional airline and aircraft leasing company. The purchase of SkyWest Incorporated amounted to 125,000 shares for an estimated value of $2,064,000. As such, the company now represents 4.4% of Burry's portfolio. Even though the last year has not been too good for SkyWest shareholders, those astute enough to open a position in the last quarter of 2022 could perceive a more than 25% return in the last few months. Therefore, Burry could be preparing for the company's impending upside. Geo Group Incorporated. The last stock we have left to analyze is Geo Group, which operates private prisons and detention centers. And we can see, of course, that it is the biggest position in his portfolio, which we will get to shortly. Burry's philosophy is usually based on buying undervalued companies with solid long-term prospects. That is why the purchase of Geo Group Incorporated demonstrates that Burry is not afraid to diversify his portfolio and incorporate all asset classes as long as it allows him to extract a long-term return. Previously, Burry owned more than 1 million Geo Group Incorporated shares, making up 25% of his portfolio, but recently the investor has divested 47% of his position, so he may be preparing for an imminent fall or looking to further diversify his investments. So, how do we summarize everything that we've discussed so far? One of Michael Burry's hallmarks is constantly moving in and out of positions, so there's always the possibility that he will make significant changes to his portfolio within weeks of buying a stock, and that we would never find that information out just by looking at the 13F filing. So if you want to keep up to date with the latest news and follow the investments of Michael Burry or other great investors, I suggest you subscribe to the channel and activate the notification bell now so that you don't miss any valuable information. With that said, thanks for watching. I will see you in the next video.